Well, the price of AMC continues to move very, very volatilely, but I am not surprised, not in the least. I want to start with a descending scallop I identified on Friday, analyzed on Monday, and then kind of sat through and waited for a breakout yesterday and didn't see it. Today, I did think we were going to get a move out of that pattern, and we sure did. Oh yeah, we did. We did a lot of things today. I have on the board behind me some of the things from yesterday's video that I wanted to point out because they either happened or they were good calls. Now, I did say that there could be a gap that we'd fill on the open, and we did do that. There's a gap back here after this explosive rally. We left a gap, and sure enough, that did fill at the open, and actually there was another gap here. And that's not great for bulls. That's not great for the bullish reversal because that's an island top, and that was something I said could happen at 4 minutes and 47 seconds. But of course, that's not what I'm looking for because I want to see the bullish reversal. It's important to acknowledge that these things can happen, and when they do happen, that you respect them. That's what I've learned, and that's why I vlog this, so that I can know when I made those calls, why I made those calls, and why I didn't do what I should have. And really, I just need to watch my own videos in the morning, which I didn't do today. If I had, I would have made my own puts, but I didn't. So what happened? We had this descending scallop and a big push down. You can see I was expecting that to be a huge push, and the price did plunge past that target of $11 and just kept falling. There was a weird moment in here where the price was just barcoding and it wouldn't go up or down. Eventually it did break down. Great. Powell didn't kick up enough dust to really start a bullish reversal from that big drop, and that was kind of sad. The FOMC meeting notes are coming out tomorrow. Tomorrow's the big day. Tomorrow's the big day. Does the bullish reversal break or does the bullish reversal confirm? I think that will be up to tomorrow. So, wow. This looks nasty, doesn't it? I think that this pennant that I hypothesized might appear is just like busted, but this level of horizontal support and resistance is still really important. And of course, we didn't get an upward breakout leading to a consolidation pattern and then a bounce off the downtrend to establish the new uptrend. Instead, what we got was just this big fat dump. Ugh, nasty. And it gets worse too. I'm just going to open something there. Let's go to the year. This is going to be a daily, and then what chart pattern did I have this on? That's the big question. I think I put it on bullish reversal progress. Yes, I did. So I said there might be an island top, and what's an island top? This is an island top right here where you have a gap zone that gets jumped over, and then you have a topping pattern form, and then that gap zone gets jumped below, and it's very small. It's a very small gap zone. But when I did the analysis for this island top, I actually got a very interesting price target. Here's Bulkowski's page on island tops and island bottoms. And I suppose he doesn't like them very much. They aren't like the best performing, right? So let's see here. Overall performance rank for up and down breakouts is 38 out of 39, where 1 is the best. So it's not a great pattern, but I think we're going to reach this target. It's probable. It is. And it's terrible too because the percentage being price target is really high. And that percentage being price target is how we create these price targets, is with a measure rule. You take this percentage being price target, you apply it to the height of the pattern, and then you either add or subtract it to the top or the bottom of the pattern depending on which way the breakout goes, and that'll give the price target. And when I did that, I got $9.70. Like exactly $9.70. So that is to say that the high from here, 14.22 to the low of 11.43, that difference by 0.62 or 62% of that height minus the low of the pattern, which is here at 11.43, produces a price target of 9.70 on the nose. On the nose. And with Bulkowski analysis, getting targets down to the penny is no problem. It happens all the time. It's not even really noteworthy. The first time it happened, I was like, and now I'm just like, whatever. It happens all the time. Who cares? So what does this mean? Well, obviously we didn't get a reversal off of that support zone, and instead we're blowing past downward. And you know, tomorrow, yeah, we're probably gonna see a touch of 970. Oh, it'd be nice just to see a good bullish reversal, wouldn't it? But I don't think that's going to happen. I'm going to go ahead and do some hopium charting here. The hopium charting, I hope people aren't getting too excited about this stuff. I like to do it because, you know, one of these days maybe it'll be right, and that'd be awesome. But, you know, there you go. I think that would be a good candle for tomorrow. I really do. And then maybe the day after we can get a good reversal here, right? And try, maybe we even close above. Oh, that'd be so good. And you can see this is what bullish reversal would look like now. And I think if we continue to do this, I'm going to keep just kind of charting what reversal would look like. And if I don't get something that looks like this, then I probably will not think I have bullish reversal. I mean, again, this is like a really hopeful thing to see this massive surge late in the week. Okay, so the flip side of this is that this is a red candle. And let me just draw a red candle here. I think this color is good. Yeah. Yeah. What if this happens? Check this out. Watch this. What if we get it like a spinning, like a short? Yeah. So this is kind of the alternative, and that's why I'm not super happy. Not super happy. I don't want to, but I should probably go over my measured move down fractal. I've talked about it so much that I'm kind of bored of it, to be honest, but it's looking like it might become more applicable in the future. And a YouTube comment, I don't know, it was last week probably, someone asked, hey, when is this or that? And I said, I'm probably going to be bearish if the price goes below $10.50 because I don't expect support at $9 or at $10. I mean, it'd be great if we did. Can you imagine if there was a double bottom in here? If we got a double bottom, like a clean double bottom here that broke out and higher, and this was happening at the end of a handle of the most massive double bottom on the monthly time scale ever, like that would be, ooh, it'd just get me so giddy, like, ooh, look at the fractal theory. But it doesn't have to happen. The price can continue to dump, and the best analysis is probably my massive measured move down. So this chart's called the third MMD, and I think I'm going to show it on the weekly time frame because it is really long, although it looks terrible here. So we're going to go back to the, we'll put this on the daily, zoom out a little bit. Okay, let's talk about it. So I've been following this fractal of a measured move down. It's essentially an ABC correction. There's a big push down, and that's phase one shown in blue. And then you have a corrective phase, which is shown in gray here. There's an uptrend through here, and there's an internal and an external trend line. The internal trend line captures the whole phase, and the external trend line just describes the push out of the bullish divergence that forms. And this happens specifically at 3 different times, on 3 different occasions, different time frames. It's like exactly the same. Big push down, bullish divergence, internal trend line, external trend line. The external trend line breaks, the internal trend line breaks, and then boom, new major low. And that's phase 3. So where we're at now is currently in phase 3 where we're finding a new major low. The way that you calculate a price target with a measured move down depends on how aggressive you're being. So a full measured move recreates that first leg at the end of the corrective phase, right? Which is over here. And there is a little bit of confusion, I think, where to start this measured rule, but Bulkowski has said both the bottom and the top of the pattern. I think if you use the bottom of the corrective phase, then you want to use the percentage mean price target, which is more around 40%, I think. And if you're going to use that whole leg, then you should probably go to the top. And when you do that, what's the price target? Like $8? It's $8 if you put it here. That's crazy. That's nuts. That's so low. But it could happen. There's no reason why that can't happen. And there's actually a bigger measured move down too than this, because that's not what I was looking for. So now I'm going to open up a blank chart. I'm just going to scare everyone who's watching this, because why not? Let's see here. Give me we'll just create a drawing set. Great. And we'll turn this on to the weekly time frame. We'll go 3-week max. All right. So the biggest measured move down starts from the very peak at 72.62. And we're going to pull that down to where the price began to reverse, and that's somewhere through here, okay? And remember I was saying that in these fractals, there's always bullish divergence in the RSI. Okay, well, here we go. Setting off of this red candle. Let me zoom in here, make sure this is correct. So I do have some lows here in the RSI, as you can see. I'm going to exaggerate this so it's really clear. There we go. So what happens in bullish divergence is you get close to overbought, oversold, and then you have rising peaks or rising valleys, and descending valleys in the price. So you see that you want to make sure that you're matching valleys to valleys or peaks to peaks, depending on whether you're looking for bullish or bearish divergence of the RSI. And then the direction between the price and the RSI need to diverge. And this generally is a good sign that you're going to get a corrective pop higher. It doesn't mean that you're going to find a low and then rally. It probably most likely means that you're just going to see a corrective pop up. And that's precisely what we saw here. You can see that we had a close here at this candle at 1506, and then at the next valley in the RSI, the low was 1427. So it wasn't huge, but we do have that divergence presence. And then suddenly, pop, you have this big push up. So where are my trend lines? Well, my internal trend line is going to cut to the price, okay? And I'm going to just say that it's probably there. That's going to be my internal trend line. Now, internal trend lines are kind of BS if you ask me, because they're convenient. They don't follow a rule. You can cut price. So this external trend line, this is going to show the rally after that bullish divergence. Look at that. Doesn't that start to look exactly like the other one I just showed you? But the other one I showed you started here, not up here. It's because it's fractaling. There's 4 of these fractals. I'm not going to go through all of them. So if you would drop from 72 down to, what was this low? 1340? Yeah, you've got $60 odd of price drop to apply to. It doesn't matter where you apply it. Even if you only take half of this run and apply it to the top of the corrective phase, which would be up here at $34, you're going to get a negative price target. So, yeah, that makes me nervous. It makes me nervous. It means the price could really just drop, and there's no limit to that either. And on this time frame, you can see that the RSI it's moving straight for oversold as fast as it can, and it's not waiting or hiccuping at all. It's just heading down. Implied volatility on this time frame is pretty flat, and that's good. I'm happy with that. When I turn this on to the daily chart, I think it doesn't look quite as bad, right? Implied volatility did come up a little bit. It's not setting new highs. Volume is decreasing in general. We're in a decreasing trend, which probably means that this move is over. The RSI is starting to come towards oversold. It's at a good spot where it could reverse. We could say that 32 is close enough to 30 to see reversal based on that. Buy or sell signal on the RSI, which is really meaningless, but what matters the most is this downtrend. This downtrend. If this is the new big downtrend I'm watching. If this downtrend breaks, then I'm looking for my short squeeze theory, which everyone loved that analysis. It was so bullish. It's not like analysis, it's speculation based on bullish confirmation. And the confirmation line for that squeeze theory would be to get a rise above the top of that candle back here, which was at 1422. So that's still a ways away. The price is going to have to make a massive recovery, break this downtrend resistance, probably consolidate along the way, and then make another bullish breakout. I mean, if Powell says, hey, inflation, we see early signs of inflation coming down, that could be really good and the markets could rally on that. That'd be fantastic. But for the time being, I need to start considering letting go of the bullish reversal. But I'm not going to, not yet, not until the end of the week. At the end of the week, I'll say, fine, I'll take my losses on these calls and start playing puts and start trying to build my balance back up. And I'll be day trading to do that. I'm not day trading right now. It's nice to take a little break. A lot of people are making a lot of money on puts right now, which is fantastic. I'm not. I'm just sitting out because I think we're going to bounce. Personally, I think we're going to bounce. That's not showing up on the charts. And, well, maybe let me make my mistakes and you can learn from that. Okay, moving on to IWM. You can see that there is a level of support and resistance at 174. That was a head and shoulder target from much earlier. This W is me speculating again, you know. We do kind of see a double bottom here, and it is defined by this downtrend. Look at this downtrend. I said this candle wasn't very bullish. It really wasn't, even though it was green. This candle is red, but is bullish. It's a hammer. This is a good hammer, sweet hammer, and it looks like we had a little rejection off of that trend line. I'm going to zoom in on that. It's important to see and recognize how that rejection occurred And yeah, there you go. Okay, so probably gonna go back down to 174, and then we'll see if the price can pop higher and break that downtrend. If tomorrow's FOMC meeting notes are bullish, then boom, that's not gonna be hard to break. It's not gonna be hard to break because the downtrend is so close to the closing price. This is a good setup to form that bullish breakout. It's a good setup. I don't want to say, hey, it's gonna happen, because you never know. FOMC meeting notes could go either way. And again, I see the same potentiality here for a measured move down. It's possible that we get, and I know, so many measured moves down. You know, that's low. Look at that price target. That'd be nasty. And then the markets would probably just kind of like collapse a little bit. SPY. How are we doing SPY? You know? Same story. It's the same story. SPY, IWM, AMC, all on the daily time frame, are all exhibiting the same thing. Currently in a downtrend and trying to find support at critical levels of horizontal support and resistance. Again, we have a bullish hammer here, and this is not bad. This is good. I like to see this. We're forming a higher low off of that lowest low we've had this year. And I think that volume is still low, but it is higher than it was yesterday. This could be very early signs of increase in volume, which could break through that downtrend. Tomorrow could be the day, and I want to say that. Tomorrow could be the day. Tomorrow could make or break this bullish reversal. And if it breaks, that's going to be really scary, and I'll get into that analysis later. But for the time being, let's talk about bullish stuff on AMC. I'm going to turn on the 15-minute chart here, and I'm just going to like start going through a couple of my drawings. Let's check back in on the price mirror. I noticed that we had a return to that downtrend. This is the downtrend that starts from the peak at 34, and the price did rush down back here to touch it. Now, in a bullish reversal, it's possible. You can see I have a line here. This would be like one move, right? And I'm going to duplicate this, and I'm going to say, hey, maybe this is just the return to the downtrend. Sometimes when you have these breakouts and the price doesn't return to the breakout price, it'll return to the actual trend line later with some momentum. And that did occur today. Absolutely. In fact, you know, on this 15-minute time frame, you know what I'm noticing right here? I'm noticing that we have a little bit of bullish divergence, and that's nice moving into tomorrow, given that downtrend's right there. It's right there. Another downtrend. Look at this. This is a proper downtrend. So AMC, SPY, IWM, all at critical levels of support. Very, very, very close to downtrend overhead resistance with a catalyst, a potential catalyst event tomorrow. I think people are terrified, and tomorrow would be the perfect day to just to capture all the bears, everyone that's flipped from bullish to bearish just gets wrecked tomorrow. That'd be great. I myself flipped from bear to bull here, and because we think, look at that. That is a breakout. That is a breakout, and this is just a test. It's just a test, and that is bullish divergence. There are hints of bullish reversal here. Now, if we do get a full measured move up, that would make my day. I mean, okay, let's see here. This took 1, 2, 3, 4, like 5. So maybe next week we get a clean measured move up, and that measured move up take us up to $15. Yeah. So here's the long and short of it. Either the markets collapse, we go into recession, and we have a big paradigm shift that could last a very long time and absolutely wreck many, many people, and the world's a terrible place. Or we get some good news, there's a bullish breakout, things aren't as bad as they seem, the markets head up to all new highs. That's really extreme. I guess there is a potential for the price just to move sideways forever, but that would be boring. And I just, with the way things are, I just so volatile. And there's something too about how social media has changed sentiment and how that sentiment affects people's behaviors and how those behaviors are going to make the marketplace either more or less stable. So I have some thoughts there too. But I think for now I'm going to leave it at that. The FOMC meeting notes are the thing to watch tomorrow for me. And if the price does start to head lower and 970 doesn't provide any support, yeah, I'll cut my calls, take my losses, and start trading puts. But I want to be bullish. I still want to be bullish. Be careful, though. Don't listen to me. Do your own research. I'm an amateur. This is a journal, a vlog. If you want to join Discord, go ahead and join Discord. You can see me stream my charts live. I do have a lot of participation right now. It's really great. If you're in my Discord, you guys are awesome. Obi-Wan's analysis has been spot on. StockX analysis, also very, very good. And with that, I bid adieu. Happy trading.